Welcome back to this special chat with Dr. Y.V. Reddy, former Governor, Reserve Bank of India. The OUP, Oxford University Press, has just published the Hindi translation of his autobiography, Advice and Dissent. The Hindi book is called Vimarsh or Paramarsh. Okay, we've spoken about the book, Dr. Reddy. I want to speak about the banking sector. Of course, in your autobiography, you discuss at length about the start of the reissue of private sector bank licenses and the failures or the disadvantages of, nationalizing of the banks. Okay, now I wanted to ask you about a point which the former chief economic advisor, K.V. Subramaniam, raises. He points out in his recent book that all countries which have had rapid growth of per capita income, like Korea, Malaysia, have higher bank credit to GDP. Their bank credit to GDP is 150%. Ours is only 65%. So do you think that this is a big drawback and that we need to push more bank credit? And in the first place, why is it that our bank credit to GDP is so low?
Thank you very much. In fact, I am very hesitant to disagree with Dr. Subramaniam because he is a specialist in the banking sector.
Okay.
But still I can say, from a macroeconomic sense, the wisdom in the world is not settled whether the financial sector leads, that the bank credit to GDP leads or it follows. Okay. The question is whether the growth is because of credit or the credit is because of growth.
Okay.
So it's that
you would rather that growth be first and lead?
Not exactly, but don't think that financial sector can lead the real sector.
Right.
In the ultimate analysis, it's the real sector which determines the growth of the financial sector. Short term,
but why are we so behind others?
That's very simple. That's very simple. Public sector banks. Not so much. I won't say for
nationalization.
First, for countries of comparable development.
Okay.
You expect a distinction of capacity of the bankers and the capacity of the banking system. See, capacity of the Indians may be great because they're in financial sector everywhere, but that doesn't mean that our financial system. So, in terms of correlation of the level of development and banking, I'm not so sure. But certainly, I don't think we should think that by encouraging financial sector, by encouraging banking, you will grow. Simplistic assumption. And this is something which happened even when in the run-up to 2008.
Yes.
I had to address this issue. The point is that we know that the debt to GDP has to raise in order to maintain the growth. But when it has to raise, what should be the... and again, whenever there's a crisis, you remember, you say that there's a problem with cyclical.
Yes.
How do you accommodate counter-cyclical policy? It's a unidirectional increase in debt to GDP ratio. And therefore, what we do is what I told the gatherings in Switzerland and all that when I discussed. I said, look, my problem is I know that the debt to GDP ratio has to increase. But how should it increase? In some sectors it should increase. In other sectors it may be speculation entirely. You see that during
and for us it also led to the NPA cycle.
And during my time, I put maximum restrictions on the real estate.
Yes.
Is that the correct thing to do or not is the question. Similarly, sectors, you have to differentiate sectors and impact. And most important, it's not the monetary policy that influences the banking system. In the reaction between growth and policies, macro policies, I think the growth and cyclicality can be addressed not by aggregate monetary policy, but from financial sector regulation. We have to make central banks perform two types of functions. So therefore, we have to be very clear. Monetary policy can handle aggregate. And whereas the
banking
regulation can be used to some extent in allocation of credit.
That is what he says. Allocation of credit is one thing. His point is that we have a capital adequacy ratio of 9, whereas the Basel norm, the BIS norms are 8%. Rest of the world has 8% capital adequacy. So his argument is we should bring it down so that banks can lend more. But there is the other side which says that because we are doing well now in the banking system and NPAs are low, we should actually impose counter-cyclical buffers.
You see, let me put it this way. Maybe he is a little too confident of our banking sector as a whole, or our governance. Let me put it very clearly. The loan recovery, so far it has shown, even recently also, the loan recovery is a result of governance. How the governance is maintained, how the law is enforced. On both governance standards and enforcement, we are very weak. As long as we are very weak, don't follow global things in this matter. We have to create our Indian buffer. We have to create Indian buffer for the. So as any particularly regulators of banking system, we'll have to say that, look, be careful, Okay. So don't say 8, global standard. You don't have global standard courts, you don't have global standard. Just
Okay. We should have global standards of governance also. Sir, the other issue that is now gaining currency, or it's a very common theme, is climate financing. Now, we have Jerome Powell saying that he is not going to change, orchestrate central bank monetary policy on climate considerations at all. He has clearly said that he has got only one mandate, and that would be inflation and growth, not climate. But India has a discussion paper on climate financing. The Bank of England has has imposed climate conditions on itself. So what do you think? Do you think monetary policy should be guided by climate financing? What's your stand?
Let me put it this way. See, climate financing relates to a particular aspect. Those big problems, very big problem. And at the outset, let me say that very serious problems for the economy and the society as a whole, that all policies have to work together. To that extent, monetary policy also should work together in terms of climate. But the question is whether the central bank has the capacity, expertise, instruments to do that. We have to be very careful in thinking that we have capacity. I think structurally, monetary policy is not well equipped. May not know what's the climate fund, I say. So what's the point? Giving money is not a development sector.
So you're agreeing with Powell that climate should not be an input into monetary policy making?
No, definitely climate need not be a formal input. But you may not be able to ignore the developments related to climate and by other regulators. You have to keep it in mind so that you don't do anything counter that. It's one thing to say that I take into account climate fund. The other thing is to say I give some appropriate ways as the circumstances warrant. That's the nuance, because from a public point of view, it should not appear that the central bank is away and apart from the societal concern.
Okay.
If the major societal concern is the climate, central bank says, okay, I am also willing to do that. But maybe US being, you see, very often when the central bank has stock, my problem is the central bank has stock sometimes to the common man, sometimes to the financial market, sometimes to the intermediaries, so you have to be careful.
Okay. So you would say that when you're making monetary policy, you concentrate on inflation and growth, but as a banking regulator, as a central banker for the economy, you must encourage climate financing.
Not encourage, but basically you should not appear to be not even taking into account a matter of such. It's like crisis. In a crisis, all policies merge. Now when the society recognizes it, all of us should merge. So I would also be add if they, I can hear, like Paul, I can turn it back and say, please tell me what I can do.
Okay.
Then the answer will come from the people.
Okay. Well, finally, Dr. Reddy, I wanted to ask you about what is your view of India's medium term. A lot of brokerages think that this is our decade, and we should be able to easily produce 6 to 7 or even 7% growth throughout this decade. Do you think that our time has come and this is going to be our decade?
I think Professor Manmohan Singh had tried it once before, if you don't remember. If you recall, when the reform started, Professor Manmohan Singh, this is our time.
Our time has come.
Nobody can.
India's time has come.
So that has happened once through Manmohan Singh. It may happen again, this time also. So don't be surprised. It's the same as Manmohan Singh rhetoric.
Okay.
There is a rhetoric, we have to accept the rhetoric. Maybe sometimes it inspires people, but otherwise it's very difficult to say our time has come. When you are ranked in terms of poverty of the people, about 130, you are among the 10% of the poorest countries in the world. You can't say India is great, but people are not great.
Oh, okay.
You would later concede that. So we have to also be conscious that when you project that I go out to the country, if they say, I say India is great, but I got problems, people are there, large number of poor people, I have to serve them. That is the proper thing to say. Than say Kautilya or something.
Okay. Thank you very much, sir, to bringing some reality into our vision of ourselves.
Thank you.
Yes, we have a bright future, but we should remember that we have big problems.